Good afternoon, ladies and gentlemen, and welcome to the Intelligent Ultrasound Group PLC preliminary results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab. It's just situated on the right-hand corner of your screen. Please simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Stuart Gall and CFO Helen Jones. Good afternoon.
Thanks very much. Welcome everyone. Intelligent Ultrasound 2021 preliminary results. I will run through the first section, which will just give you a summary of the company, what we've achieved during the year, and then Helen will run through the numbers, and then we'll take any questions at the end. So for those of you that don't know Intelligent Ultrasound, we are an ultrasound specialist company. Our vision has been to make ultrasound easier to learn and simpler to use by providing classroom to clinic training, guidance, and real-time support to medical professionals. Now, what does that mean in reality? Well, it means, we've had another year of progress. We've had a very good year building this business. So we foundationally have built a simulation business that teaches doctors how to scan. And then we've moved into the AI software side of the business that follows that doctor into the clinic and helps them understand how to scan, speeds up how they scan. And we've raised revenue across the board, 7.6 million, up 47%. We've reduced our operating loss. We've got cash of 5 million left in the bank. Importantly, for the simulation side of the business, we've launched 2 new products into the marketplace. And on the clinical AI side of the business, we've actually now got 3 AI products in, plus our relationship with GE, all of which I'll talk about in a minute. And I think I'm also pleased to say that for the first year, we have our ESG report will be in our report and accounts, and that we are now a carbon neutral company. This really summarizes what classroom to clinic business is. We have spent the last 4 to 5 years building a business that covers both classroom teaching and then clinically guiding and supporting sonographers in the hospital. We've had products regulatory cleared, and we've now generating revenue, those products in all the sectors. So we teach doctors how to scan with a range of high fidelity simulators. And then when they go into the clinic and they're using an ultrasound machine scanning patients, we then provide software tools that help them scan those patients faster and scan them better. We have an agreement with GE Healthcare, and we've also got our own plug-in devices that are available, 2 products in the marketplace, plus the ability in the future to take these products into the new diagnostic area of AI ultrasound. That's for the future. What I'm talking about now will be the 2 sides of the business. So simulation revenues, this was the business that we started over 10 years ago. It's the foundation of the business today. It's all about teaching doctors how to do ultrasound. Now, ultrasound is one of the fastest growing medical imaging tools there is in the world. It's cheap, it's simple to use, it's safe, and it's done at point of care. And because of that, a lot of people want to use it, but the hard thing is knowing how to scan. It's quite difficult to scan. You need quite a lot of hand-to-eye coordination skills. It's difficult to do as a doctor. And we decided that we would basically use the latest technology, virtual reality, augmented reality, to teach a doctor how they could scan in real time. We build simulators that do that. We sell them all over the world. We've got about 1,350 systems sold to date in over 650 medical institutions. We sell in the UK through a direct sales force. We sell in the US through a direct sales force based out of just outside Atlanta in Georgia. And then we have about 30 resellers based around the world. We have grown sales from 2014 last year up to 7.4 million, which is a 42% increase on last year. And we were forecasting to do about 8.4 million this year, but we've just upgraded our forecast to over 9.4 million pounds for 2022. Markets are split broadly, one third between the UK, US, and the rest of the world. And we currently have 3 products. Well, we have 3 products in the marketplace that contributed to those sales last year. We have two new products coming to the market for 2022. The Heartworks is launching a 3D Echo simulator model. That's a software addition to the existing 450 systems we've got in the marketplace. It sells at about $20,000, $20,000 to $25,000 for this piece of software. And we launched it at IMSH. That's the big international simulation and healthcare show in January. Very well received. At the same time, we launched our BabyWorks product. This is a new platform simulator. So whereas at the moment we've currently been in the obstetrics market, teaching doctors how to scan obstetrics and gynecology, we're in the heart market with our Heartworks product, and then we've been in the point of care ultrasound market with our Bodyworks product. Bodyworks is the new simulator. So it's adding as a fourth simulator range. This was also very well received at IMSH in January. So the simulation business has grown well, 42% growth last year. We've got a really established and growing sales network, both direct and reseller. Our operational base in both the UK and US is well established and has lots of room for growth. We've now got a core simulator range of 4 products in the marketplace. And importantly, this side of the business contributed $4.5 million of gross profit to the group's total overheads in 2021, which is for the first time is a broadly break-even side of the business. Moving on to the clinical AI side. So this is where we now follow the doctor who's learned how to scan on a patient, and now they're going to actually scan clinically. And what we've done over the last 4 years is build a really strong clinical AI capability in this very new and exciting area of AI-aided ultrasound image analysis. So based on the foundational work of Oxford University and the cutting-edge AI expertise of Professor Alison Noble, she's one of the world's leading experts in this area, supported by Professor Aris Papageorgiou, who's one of the world's leading obstetricians in AI as well. We've built a team. Our head CTO, Nick Sleep, has got a team now of 24 AI-related employees, software developers, clinical team, segmentation team, very large databases of curated images, FDA and CE regulated experience in-house, strong clinical support team. That has enabled us to sign an agreement with GE Healthcare. It's our first big OEM vendor partnership. Plus, we've launched 3 devices into the marketplace and have 5 sort of variants in development. So this is a really exciting time to be in this new area of AI image analysis in medicine. So how do we do that? Well, ScanNav is our product. It's basically AI software that provides real-time support to medical professionals as they scan. I'll show you what that is in a second, but we take the product to market in 2 ways. One, we sell to the vendors themselves. Royalty-based licenses. First deal has been signed with GE, and we've just announced an extension to that agreement. And then we have our off-machine route where we sell the products ourselves into the ultrasound aftermarket. We have a product called ScanNav Anatomy. That's all about ultrasound-guided needling. We've had our first product approved in the UK last year and just launched. I'll talk about both those now. So ScanNav Assist is basically our automated image analysis for anything that's protocol-based scanning. So the product's designed to just help and enhance workflow when you're scanning, but also enforce standards and consistency. So if you imagine as a sonographer, you're scanning a patient, you've got to move the probe, the pregnant lady's lying on the couch, you've got a 20-week fetus to look at, you're scanning the image to try and see that baby, and you've got to get about 20 views that conform to the international guidelines for what you've got to see to know that you haven't missed anything and that everything is normal on that baby. So it's a very pressurized scan, and the baby's moving, it could be any position, and you've got to try and find the images. What our software does is when you freeze the image, in this case you were looking in the center of that picture, you're looking at the profile of the baby's head, you're meant to see 3 things in that profile. You're meant to see the forehead bone, you've got to see the nasal tip, and you've also have the image magnified enough so that you can see it. When you freeze the image, our software automatically recognizes what it is. It's a head, and then recognizes if you've got the key elements of that anatomy in view and gives you a green tick to say that image is okay to save and you can diagnose from it. When you finish the scan, it will tell you, have you saved all the images? So 20 images. If you've missed 3 of them, because it's easy to forget over a 30-minute scan, did you get the correct view of the head? For example, it will tell you haven't. And basically this enables you to minimize errors, helps with minimizing patient recall, decreases scanning time, very important, but also in the current world where there's a lot of stress on operators to scan more and more and more, actually you don't want burnout. So our product is there to help support you that actually the image you've taken is a good enough one. That's a very supportive tool. So we think this is a real potential in the marketplace. GE have this product on their machine. It's currently launched as under the brand name Sonalist. They've launched it on their Swift ultrasound machine. That's their first. Voluson is the GE's range of ultrasound devices, and they have three main machines in the marketplace. They've got the Swift, they've then got Signature, and they've got Expert. So we're on the first of those now. We're in a 10-year partnership to put it across all of the Voluson range, and we're at the quite exciting first steps of that. Now the key thing is to extension of product and take-up rates. It hasn't been easy launching a new product in the world that's affected by COVID. As you can imagine, when you're selling a new product, you've got to go and explain it to people. You've got to show it to them, let them scan it. Under COVID, a lot of restrictions have stopped any face-to-face meetings, restricted access to hospitals, restricted access to the sales team. So this has meant that it's taken slightly longer to get products out to marketplace, but now we're right at the point where we think this is clearly going to take off in a future, potentially very large market. And importantly, GE did announce at the end of last year, we signed it at the end of just before Christmas, announced it just after Christmas, that they had extended the agreement to another range. Now, I can't talk about that because it's under confidentiality, but we do expect that to be something that will generate additional revenue in 2023. Now, the revenue that we get from people like GE is basically a royalty-based license. The other way we sell is selling direct ourselves. So we have a product called ScanNav Anatomy, which rather than being based on obstetrics is based on ultrasound guided regional anesthesia. This is a plug-in device. You can see it on the right-hand side of the screen. It's on a sort of mobile trolley. You plug that screen into the hospital's existing ultrasound screen, and it replicates what's being seen on the ultrasound and then puts a color overlay on it. So regional anesthesia is basically local anesthetic. So instead of having to have general anesthetic, if you've got an operation on your hand, you can block the nerves in your arm, which means you don't feel anything. You can have the operation, but you don't have to go into general anesthesia. It's a smaller, it's a quicker visit to the hospital. It's less dangerous for the patient. It's cheaper for the hospital. So everyone wins if you can do local anesthesia. What we found in the market was that the anesthetists that do this are less used to doing ultrasound, very good at doing the injection, but actually understanding all the ultrasound was the area they felt least confident in. And any device that could help them with identifying the artery, the nerve, the artery you've got to miss, the muscle, etc., i.e. highlighting the key anatomy live, as you can see on the middle image, would help them, and they would be interested in purchasing it. So this product was launched last year. We've just been bringing out all the peer review papers. We've started to make our first clinical sales. We've got very close links with the ultrasound-guided regional anesthesia key opinion leaders in the UK, Europe, and America. The US version is going through FDA at the moment. We hope to have clearance sometime around the summer. And we've employed 2 dedicated people to sell this product, one in the UK, one in the US, to get us going. So we think the commercial rationale for this is strong. It's for the competent but less confident clinician. It's going to help increase the number of clinicians who can perform P&Bs, and ultimately that saves hospitals money. So we are now in the process of turning the product and all the very positive reviews we've had and turning that into revenue for 22 and 23 onwards. Final product in the range is Needle Trainer. Needle Trainer is a peripheral nerve block teacher in that it teaches you how to do the guided needling element. It's augmented reality. As you can see in the image in the center, you've got a volunteer lying down. You've got in effect a fake needle. It's a little bit like the old theatre knives. If you push it in, the knife disappears back up the shaft of the handle, up the handle. So you can push this fake needle in. The system knows exactly where it's gone in the body and then can reflect that on the ultrasound. So it looks like you're needling a live patient. So very realistic, potentially very large market again. And we are launching this product. We launched it in January. We now bring it to market. So we'd expect to make some first sales this year and then obviously main sales in 2023. But our third product in this new clinical AI market. So that although we're in the very early stages of this technology, although it's been launched under pandemic restrictions, which have stopped all the face-to-face interviews, we think we're now going to be able to start to grow. So we're forecast to triple sales this year, and then clearly hope to start making real material revenues from 2023 onwards. And that's mainly because we can start doing face-to-face medical exhibitions again. We can go to the congresses. We literally haven't been to any for 2 years. It's so great to be out talking to people and then telling them about this product. And now we're able to do it and build these revenues going forward. So the summary in terms of where we are in terms of revenue going forward is, look, it's been a positive year for the group, despite the restrictions still being in place. We're well placed to build on this growing range of both AI and simulation related products. We've never been so strong in our product range. We've had a really strong start to the year. Revenue was expected to be 9.3 million, just over 9 million, 9 million for the year. We've upgraded it to 10 million. So that number went out this morning. So that is a quick summary of the company. Helen will now take over and talk you through all the numbers.
Thanks, Stuart. Good afternoon, everybody. So these are the key financial highlights from 2021. So in a year where the pandemic still dominated the world, we recovered really well, with our revenue up 47% to 7.6 million, and more importantly, exceeded our pre-pandemic revenue of 5.9. Our R&D investment was 3.3. We continued our investment across both parts of our product ranges in simulation and clinical. Our operating loss was marginally reduced to 4.3 million, and we ended the year with 5 million of cash. So just into a bit more detail on the revenue. So most of the revenue, 7.4 million of the 7.6, comes from our simulation side of the business. We sell through 3 regions and our direct sellings team in the UK and US, and then through our 30 resellers across the world. There was recovery and really good growth across all regions, particularly in the UK, which was 76% up. And that was driven by NHS funding for ultrasound training, which we were able to benefit from and continue to do so in 2022. In the US, we had 18% growth, and that exceeded pre-pandemic revenue as well. So really good, positive set of results from that region. And our reseller network, probably the most impacted in 2021 from the pandemic, but still good growth from 2020 of 53%. From the clinical business, 0.2 million of revenue. First revenues from our 2 AI products that we launched in the year, the Anatomy PMB and Needle Trainer that Stuart's just talked about, as well as some royalties from GE. Clearly, that growth from that side of the business was impacted by the pandemic, with exhibitions and conferences, access to teaching institutions, not being possible in 2021. So, as Stuart said, we're hoping that the 2022 and the revenue growth will be much larger in 2022 and 2023 in that part of the business. So just going down the income statement, talked about revenue, 47% growth. Gross profit is in line with that, with 1.5 million additional gross profit in 2021. Very consistent gross margin of 61%. To 2020, with a very consistent mix across our regions and across our product ranges, as well as a relatively stable cost of goods. So positively, that stayed the same. We did, however, have higher SG&A of 24%, from 5.7 to 7. So although we generated 1.5 million pounds more gross profit, we did have 1.1 higher SG&A costs. And over to the right-hand side, I've put a split of that increase of 1.1. So over 60%, about 600,000 of that related to higher sales-related staff costs, commissions and bonuses, as well as royalties. We also had higher distribution costs, particularly in the US. On top of that, we had higher insurance costs, as well as the full year impact of our 2020 recruitment, as well as pay rises. Also in 2020, we had a COVID grant, which made the 2020 SG&A costs look lower. We didn't have that in 2021. Due to company-wide share options issued at the end of 2020, we had the full year of the share-based payment charge. So we had a £380,000 additional charge going through that line in 2021. We expensed 2 million out of our 3.3 R&D. which led to our operating loss of 4.3. We received R&D tax credits due to we offset our tax losses for R&D tax credits, and we estimate that for 2021 to be 800,000, which we'll receive in 2022. So on a like-for-like basis, that's about £100,000 higher than in 2020. So from a balance sheet point of view, our net assets decreased by 3 million in the year, largely driven by the reduction in cash. We didn't do any fundraisers in 2021. We had higher current liabilities of 1 million, and that was offset then by higher intangible assets, which relates to our capitalised R&D spend across both parts of the business, higher PPE and inventory, plus higher trade and other receivables due to higher Q4 2021 trading. So, that's it from a financial highlights point of view. I'll hand back to Stuart to summarise.
Thanks, Helen. So I think in summary, look, this has been, a really positive year for the group. We've increased revenues by almost 50%. We're building a really excellent partnership with GE Healthcare, who are the world's leading ultrasound company. We've launched 2 new AI-related products into this, what is an exciting real-time ultrasound imaging market. This is the future of imaging. Almost every single vendor in the world believes AI is going to be a big driver for sales going forward. And we've extended our simulation range to 4 platforms. So when you look at what's going on in terms of with the world restrictions in the world relaxing from COVID, albeit that, China having sort of zero tolerance policy and having a lockdown we're still going to get some impact. But actually, as this general relaxation goes on, certainly we expect to keep seeing this growth in the simulation market. But most importantly, for the newer area of these potentially higher growth AI related sales, we think these relaxations are what we need to be able to get out and start properly selling the product going forward now and really building on this. We've had a strong start to 2022. We expect revenue to be ahead of market expectations. As we said, we're forecasting 10 million now for the year. And we obviously, as a business, we're still very much monitoring our cash, measuring our investment in new products, looking at how we expand our sales network against the potential future sales growth curve. So we're trying to anticipate how that's going and balancing our cash with that. But actually, we are very excited about where we are. We think this is a great market to be in. We're right at the right time and the right place in a new market that's got potentially really high growth and revenues for us. So that concludes the presentation. We'll now move over to answering some of the questions that have come through.
Stuart, Helen, that's great. Thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while Helen and Stuart take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Stuart, Helen, as you can see, we've received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. If I may just hand back to you just to run through that Q&A tab and where appropriate to do so, if you could just read out the question, give your response, and then I'll pick up from you at the end. Thank you.
Okay, thanks. I had a question. When do we expect ScanNav Anatomy to be available for sale in the US? Well, obviously that's completely dependent on the FDA. That isn't in our control. What has been in our control is the resubmission. We had to redo our human factors study. That has been done in the US, resubmitted. So we would hope that it will be in the second half of this year, and we continue to hope that. Second question, how big is the addressable market for the new BabyWorks platform? Who are we looking to displace and what differentiates the products? So I think what we've tried to do is our products are all based on trying to replicate real-time scanning. So it's not an easy skill to learn. So if you make it as realistic as possible, it's easier, so that when you go into clinic and practice and actually go on a patient, what you're doing represents what you learned. And it's less pressurized than trying to have, 5 minutes scanning with a doctor standing beside you. You can get to practice on your own in a very, very realistic situation. So we're looking to basically take the products that we've done in all the other sectors and move into the pediatric and neonate. There are other ways of doing this, but we think ours is the most realistic way of teaching this in the marketplace. So the addressable market, I think we're looking to sell into every single hospital there is in the UK and the US. So all the big teaching hospitals, should have the ability to buy our product. There's over 200 in the US, there's about 180 in the UK, and generally these hospitals don't just buy one, they buy many of them. So the market for this product, we think, is a large one that we can access with our existing sales force. We've got a question saying, what changes do we think might result from the spin-off of GE Healthcare? So obviously that hasn't happened yet, although it's been announced. But I think, like any big company, when you're one division within a huge company, when you become focused on your division, you have the ability to make quicker decisions and react quicker in the marketplace. And that's what I would expect to see from GE Healthcare. The ultrasound side of the medical imaging business, I can see that they'll just have the ability to react quicker and have more autonomy in making their decisions. Next question. How big is the company's sales force? Where are they located? And what proportion of revenue do they represent versus resellers? Well, the sales force we've got 5 salespeople, actual salespeople rather than support personnel. We've got 5 salespeople now in the US. It was 3 last year. It's now 5. We've got 2 in the UK plus 1. So it's now 3 in the UK because we've added, obviously, some dedicated people to sell the new AI products. And our direct sales force currently on 2021, Helen, I think it's about 70%. Is that right? Yeah. So do you expect GE to add Sonalist to the Signature or Expert series this year? So, I mean, obviously, GE's launch plans, what GE's doing is obviously confidential. I think it's fair to say, as Expert and Signature make up the Voluson range, that we would hope that our products will extend across all the products as they launch new products into the marketplace. So I would say yes, we clearly do hope that. I cannot say when we would expect that because that is up to GE, and I'm afraid I can't talk about that. Can you please give some sense to the expected movement in average gross margins for the current year, given the expected sales mix? Well, I think at the moment, because the spread would be 9.4 million of SIM versus 600,000 of clinical, the clinical obviously is at a higher margin. So, when we sell a royalty-based product, it's 100%. When we sell a hardware and simulation, it depends how many years of the software we've sold with it. But let's say generally it's an average of 80% gross margin. That will impact, but only marginally on the current ratio. It's as the ratio of clinical sales grows compared to the simulation that you'll start to see our margin line start to increase. What are the prospects for third-party licensing of ScanNav PMB? Well, I would hope they'll be good. I mean, I think the key is FDA approval. Once we've got we've got CE approval. Once we've got FDA approval for the ScanNav PMB, I would say that would hopefully significantly enhance our ability to talk to people and people's interest in the product. Because I think, like anything, the more you can de-risk it for a manufacturer, the more likely they are to be interested in it. So we would clearly hope to be talking to third parties once we've got PMB through FDA, which again, we're hoping is going to be sometime towards the end of this year. How does the competitive landscape look like, and how well are you positioned? So I think, look, we've been fairly open about this. This is a competitive landscape. There's every major ultrasound vendor has their own ultrasound development in AI. There are a lot of competitive companies raising vast amounts of money in California, Israel, Singapore, etc. And I think what we've managed to do on relatively little money is outstanding, to be honest. In the last 4 years, we have dramatically improved as a business. We've done everything we said we'd do, brought products to marketplace. We've now got 3 AI-related products in the marketplace. And I think when you compare like for like, we've had a stunning performance. However, it's still competitive out there. And clearly there's a lot of people saying this is a place to put your money. Now, that's sort of double-edged because it means there's competition. But on the other side, it means this is an area that people recognize could be a huge potential future market. You'd almost might be more worried if there was no competition, because people might be saying, well, why are you selling what's the market for this? So I think It's competitive, but I think we're in the right place, and I think we've done unbelievably well in it. So I think the future, where we're standing now, looks really good. Right. So when we do FDA approval, sorry, the question was, your FDA licensing was quick. Is your relationship with a large US firm advantageous? And yes, it is advantageous when it's being done by the large OEM. So if a vendor is putting the software into their machine, they would do all the regulatory approval process. Whereas if we're taking our own device through, we do it, which in this case, we've had to do a de novo application, which is much harder. And that's why the device regulatory process is longer than when you're just doing a piece of software that's being added into the general ultrasound machine's approval process. Next question. Has the approach towards sales of ScanNav PMB evolved given your early direct sales experience in this area? Probably too early to say. I'd say, we've now had a proper sort of 6 to 9 months of feedback. We've now been able to properly get out and talk to people, albeit only in the UK. I mean, I think the feedback has been actually what we're doing, getting in front of doctors, letting them see it, letting them use it is the key. And having someone dedicated does make the difference. This is it's a new product, and you've got to do everything possible to take away any hurdle towards buying it. So, yes, that's why we said, right, no, let's put someone in America and the UK so that they're absolutely dedicated on it. And as that interest grows, then you can look to expand on that. And I think that's where you would look at what could you do quicker. You could maybe have more people selling the product. But again, that comes back to we're trying to balance our cash versus investment and against what's the revenue like and how's it coming in? How's it coming through compared to your sort of growth curve that you're anticipating? I see no more questions.
Stuart, that's absolutely right. Thank you very much indeed for taking the time to address all of those questions that came through from investors. And of course, if there are any further questions submitted today, we'll make these available to you immediately after the presentation has ended. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform. Stuart, perhaps for redirecting investors to provide you with their feedback, which I know is particularly important to yourselves and the company, if I could please ask you just for a few closing comments, that'd be great.
Yeah, so I think, it's really repeating what I said at the end, which I think, look, this has been a really positive year for the group. And I think we are in a genuinely exciting space. I think for a UK company to be doing what we're doing and having achieved what we've done on relatively little money when we're competing against really the big boys from overseas, we've done a lot. We're in the right place at the right time. And I'm very excited about where we can go.
That's great. Stuart, Helen, thank you very much indeed for taking the time to update investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Intelligent Ultrasound Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.